Taiwan Semiconductor manufacturing and Intel stock are gaining investor interest given their position in the development of GPUs for artificial intelligence. But investors are curious which one is the better stock to buy. That's the question I'm going to address in this video. I'm going to compare Intel and Taiwan Semi on several different financial metrics, including revenue, operating profit, cash flow, and valuation to determine which one I think is the better AI stock to buy today. So let's take a look at these two interesting stocks.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the first metric I wanted to compare is revenue, trailing 12-month revenue over a decade to see if there's growth. And for Taiwan Semiconductor, there's obvious growth here. 71 billion in trailing 12-month revenue in the most recent 12 months. That was up from a little over 20 billion in 2015. So Taiwan Semiconductor has more than tripled its revenue. Of course, Taiwan Semiconductor is the supplier to NVIDIA and AMD. And of course, NVIDIA's business is absolutely soaring. And so as NVIDIA soars, Taiwan Semiconductor benefits directly from that trend. Intel, meanwhile, has been behind with investments in technology, and now it's falling behind. It's trying to catch up, investing in the latest technology. It's being helped by the US government with billions and billions of incentives to expand manufacturing, develop the latest technology, and Intel is using that as an opportune time to build out its own foundry business. So Intel potentially has great upside if these investments pay off. Now, the hurdle is lower because it's being helped with billions of dollars. So if that wasn't there, it would have been harder to profit from these multi-billion-dollar investments. But since it's being supplemented with billions of dollars in grants from the US government, it won't be as difficult to profit from these latest investments because the cost will be so much lower. So good timing here for Intel, getting the benefit of the US government desire to increase manufacturing of semiconductors domestically. The next thing to compare them on is the operating profit margin. And Taiwan Semiconductor has done a great job in this metric, rising to 41.82% in the most recent period, trailing 12 months, while Intel's operating profit margin has collapsed due to the investments in expansion. It will likely recover over the next few years, but it's still going to be a headwind in the near term as it continues investing. Remember, these take time to build out and finally get a product to market from these new facilities and generate revenue and then expand scale large enough to profit from the added capacity. So it'll be some time before Intel returns to its profit margin above 20%, which had done a good job of prior to these massive investments. So there is some patience required with Intel stock, something some investors are not willing to give because Intel stock is meaningfully underperforming year to date in 2024. It's down significantly, while Taiwan Semiconductor is approaching record highs. So big difference in performance year to date in 2024. Investors are losing patience with Intel. They're losing confidence. They're losing faith in its ability to execute, to invest in leading edge technology, and for that technology to turn into revenue and profit and competitive advantage in the markets it serves. Cash flow from operations is a similar story, albeit looking a little bit better for Intel. 57.49% in cash flow from operations for Taiwan Semi. That's an excellent number, near the best of the best in the world, regardless of what business you compare it to. 57% is among the leaderboard in cash flow from operations to sales ratios. Intel, similar dip here because of those investments, down to 21.78% in the most recent trailing 12 months. Although before those investments, you can see a capability to generate strong cash flow, over 40% in cash flow from operations to sales in 2018, 2019, 2020 for Intel. So I also wanted to compare these two on their balance sheets, and what I have here is their cash and short-term investments in the purple, and then in the orange I have their long-term debt. I have a chart here for each of them, and with Intel you'll notice that it has more debt than cash. It has 52 billion in long-term debt and 21 billion in cash and short-term investments. For Taiwan Semi, it's flipped. It has more cash than debt. 61 billion in cash and short-term investments in the purple and 30 billion in long-term debt in the orange. Taiwan Semi could pay off all of its debt and it would still have $31 billion in cash left over. So it's got a really strong balance sheet right now, and this is an opportune time to have a strong balance sheet when demand for semiconductor manufacturing is at its highest. Taiwan Semi has the cash to invest in expansion, and that's what it's doing as well. It's adding new facilities in Japan, in Arizona, and in Taiwan. So Taiwan Semi not sitting back and allowing others to invest in new technology. They themselves are investing to expand manufacturing as well. And finally, I wanted to compare these two semiconductor stocks on their valuation, and I chose to use the forward price to earnings ratio. And using this metric, Taiwan Semi is more expensive than Intel. Taiwan Semi is trading at a forward price to earnings of 21.86 compared to Intel, which is trading at a forward PE of 15.74. Interestingly, Intel is at its cheapest valuation it's been, according to this metric, going all the way back to July of 2021. Taiwan Semi, meanwhile, is trading at roughly the same similar valuation it's been going back until July of 2021. It's a little bit higher than its average going back to that time. But if I had to pick one of these two, I feel that Taiwan Semiconductor has earned the premium valuation. So if I had to pick between these two, I would pick Taiwan Semiconductor. Of course, the most obvious risk for Taiwan Semiconductor is the geopolitical risk and the tension between the country it has its primary manufacturing and its relationship with China. And so that's a major risk. That's partly why Taiwan Semi is investing in manufacturing capacity overseas in Japan and in the US to diversify a little bit away from Taiwan, although it's going to take a long time for Taiwan Semi to be able to do that. But each step forward is a little bit lower risk for investors investing in this innovative semiconductor manufacturing company that supplies NVIDIA, which is absolutely thriving. So in other words, Taiwan Semi is my pick between these two. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.